Good afternoon, everybody. Today I'm chatting with Chad Peter from Ridgeline Minerals. Guys, people pitch me exploration companies all the time. Now, what I find interesting about Ridgeline is that they've essentially got the backing of both Barrick and Newmont via Nevada gold mines. They've also got a carried interest in two projects, the Swift project and the Selena project, which mean that the company basically doesn't have to worry about any dilution as they've got other companies that are going to go and drill out the properties. In this interview, I really get the sense that Chad is out there whale hunting, and he's also concerned about the dilution that exploration can have on exploration companies. So he is really trying to think two steps ahead in terms of how he can create value for his shareholders and what that's going to need to look like in order to give those kind of returns that you should be expecting as a junior mining investor. All right, everybody, enjoy the interview. Chad, thanks for joining us.
Yeah, thanks for having me.
So it's the first time we've chatted before, and you are obviously CEO of an exploration company focused on gold and copper. So maybe we could start off with sort of a bit of an overview on sort of what gets you excited about gold and copper, and what are the things you think about that make you want to wake up every morning working in this industry where you're out looking for these commodities.
Well, the last 2 years has made it tough to wake up some days and keep on slugging away. But no, I'm an exploration geologist. That's how I started my career. And I'm really excited about both potential of gold and copper. Primarily on the gold side, I mean, I think you can look at, we don't need to get into the macro stuff too much, but you look at the fundamentals of what has driven gold in past bull runs. That's all there in spades right now. And I think once the excitement over the US election kind of fades down in the new year, I think gold will come ripping back. So we're really happy to have exposure to multiple high-grade gold projects in Nevada. On top of that, we think that we started to focus more on copper exploration over the past few years, and that's largely because we've wanted to have exposure to what we think is going to be a huge run in copper over the next 20 or 30 years as we transition to more electric and EV-related mining and obviously production of all those items. So.
All right, so you started talking about Ridgeline, so let's get into that. What are the key assets here? How's the company structured? What's sort of the overview of the company?
You bet. So Ridgeline is a precious and base metal explorer focused solely on Nevada. We started out actually out of my garage in 2018 as just a pure, drill and kill explorer. And by that, I mean, we just focused on owning 100% of our assets, raising capital, drilling and testing the targets and hoping to make a discovery. What we realized during this most recent downturn, over the past 2-3 years is to really be effective drilling deep and high risk targets, and especially in Nevada, you got to bring on some partners. So that's what we've done. We've kind of become, our business model has merged into more of a hybrid explorer in that we have multiple deals with major companies, 2 deals with Nevada gold mines on our gold projects, and a deal with South 32 on our polymetallic CRD project called Selena. So in total, we see $60 million in potential cash expenditures across those 3 deals. And the way Ridgeline has actually structured these deals is we own the deals, if they're fully executed, we would retain a 20 to 25% fully carried interest all the way to commercial production at each project. So our goal is we want to be able to meaningfully participate in these potential success of these major deals. At the same time, we didn't want to be exposed to the financing risk that typically comes along with being a minority joint venture partner in the development of a mine. So we were able to take, I'd rather own 25% of a mine that has, that I can participate in the development of without issuing a share to get there, versus owning 40 or 49%, but having to participate on a pro rata basis. So that's been the genesis of our deal flow over the last 2-3 years.
And I think that's interesting for a lot of retail investors, because one of the hardest things to wrap your head around when you think about junior mining is all the dilution, right? Like,
Yeah.
it's like you hit a decent drill result. What does that mean? It means you got to go raise money and drill more. And and I like that part of the model. But how do you do a deal like that and make sure that your partners are moving forward with the exploration, and you're not just kind of sitting back for 5 years watching them not do anything?
Well, that is a great point to make, because there is always that risk, right? Majors operate on a completely different time frame than what a junior explorer is looking at, or the shareholders that are looking to benefit from one of those deals, right? So the way we've structured our deals, I think the really key part that really got these majors excited is that we actually at Ridgeline was exploring each of these projects 100%, right? We did all the work focusing on making 100% discovery ourselves. And so we did really good work. We did a ton of work on each of the projects, which really materially de-risked these projects. So when we delivered these deals, the projects were drill ready, right? They didn't require years of getting for the major to get their feet under them. And then we put pretty aggressive spend requirements on those deals to make sure the money was going in the ground right off the bat, all the way through the 5 years of exploration. So just to put it in perspective, like our Swift deal, which is a gold deal with Nevada Gold Mines, joint venture between Barrick and Newmont, that is a $20 million initial earn-in US of spending that's required in the first 5 years. It's been 3 years. It's 3 years into the deals now. They spent about $8.3 million as of Q2 of this year. And so obviously they just announced the first high grade intercept on this project, which should be 2.7 meters of 7 grams, including a meter of 10 grams, which obviously we want to see get thicker. But that's the first high grade intercept of this project. We're only 5 kilometers away from a 23 million ounce gold mine, right? That is owned by Nevada Gold Mines. So there's a lot of synergies there. They're very excited. For them to earn their initial 60% stake, they still have to spend about $11.5 million over the next 2 years. I mean, that's an aggressive spend. Any shareholder in Ridgeline that likes what they see about that Swift deal, there's going to be considerable drill catalysts coming down the pipeline over the next 2 years, or else we get the project back 100%.
I'm just sort of looking at our notes here. So Swift is option to Nevada Gold Mines. Selena, if I'm pronouncing it right,
Yep.
is option to South 32.
Yep.
How's Barrick in the picture here?
Well, so that's the if you actually look back to the history of how Nevada Gold Mines formed, it was actually a merger of both Newmont and Barrick's Nevada assets, producing Nevada assets. So Barrick ended up owning about 62%, I believe, maybe 62% of the combined entity. So they're actually the operating partner. Newmont is the minority partner in Nevada Gold Mines. And the reason they did that merger was all the synergies from combining their operations. So, for example, Barrick would be mining at one of their mines, and they'd be trucking ore past a Newmont processing facility, and they'd be trucking it 50 miles past to get to their trucking facility. So, they obviously, it was wasting money. By combining the two companies, they were able to drop their overhead costs and dramatically improve efficiencies across the companies. So, Nevada Gold Mines now is very aggressively exploring in Nevada. They're looking to make new discoveries, and that's why they've done 2 deals with Ridgeline on projects that are directly on trend of existing Nevada Gold Mines mines.
So how did the arrangement come about? Does one of your directors have a history with one of those 2 companies, or how'd this happen?
Yeah, well, luckily for me, I was the U.S. exploration manager for Premier Gold Mines, which is now I-80 Gold. So I worked for Ewan and their team for over a decade. And we did multiple joint ventures with both Barrick and Newmont. So we knew both teams well. When I jumped off and started forming Ridgeline, I kept their exploration team kind of abreast of what we were doing the whole way along. And we hit that transition point where we realized, okay, we need to spend $10-20 million to take this project to the next level. Let's bring on a partner. They were the first group that I called.
So Chad, with your background, is it fair to assume that when you are looking at any new project that you guys might get involved, Ridgeline might get involved with, that you are probably going to go have some just casual conversations with people from major companies to just sort of get a sense of how doable a JV might be before you even, cross the T's and dot the I's?
Well, actually, I mean, whenever we're looking at a project, certainly we go, would this appeal to a major, right? And if it doesn't, we're not really interested, right? Because at the end of the day, our business model is not to put a project into production. We want to make discoveries, monetize those, and then move on. But what we actually do is we don't pick up a project unless we believe we can advance it 100%, right? So the first goal as a company is always to go, okay, could we advance this 100% and make 100% own discovery just for Ridgeline? What has invariably ended up happening at each one of these assets that we ended up dealing is it could be that we realized we had to suddenly, 2 years into exploration, that we have to drill a heck of a lot deeper than we thought, right? And this is far more expensive and far more risky than we want to expose our shareholders to. At that point, we then bring a partner in, right? At the case of Selena, we did 5 drill programs and drilled 10,000 meters. We're very close to a maiden resource at that project. It's a high grade silver, gold, lead, zinc CRD. But we did realize, okay, to really take this project to the next level, we need to spend about $15-20 million to drill these deep targets. And so we brought on South 32. So I think the reason that the majors, the various groups have been excited about what we're doing is every single one of the projects we explore and develop, it ourselves first. And so that means we do all the good work. We take the care to actually do high quality geology. And it de-risks the projects to a point where the majors come in. A lot of prospect generators, for example, they don't do that level of work, right? They pick up a patch of ground, try to put a little lipstick on it. Hey, this is near an existing mine, come take a shot at it. But those are high risk and low chance of success kind of style of projects. And so the majors tend to not do deals on those kind of projects. That's what kind of differentiates us as a hybrid explorer. We've done that work. We've de-risked the projects to a point where it's kind of a no-brainer for these majors to come in and take it to the next level. And it also allows us to have a high degree of, leverage when it comes to structuring the deals. You'll look around, there's very few companies globally under 20 million market cap that hold fully carried interest all the way to commercial production with major partners. And I think we've been able to have that flexibility with our deals because we do good work.
That's a very interesting point that I think is worth looking into, because when I chat with companies, or if I'm ever advising any CEOs on how to sell their stock to investors, it's, well, what makes you guys unique? And just hearing that there aren't many companies your size that have full carried interest, that is interesting. So if I am an investor and I'm looking at you guys, and I was having a conversation with a friend today about this, where it's like, this is part of the problem with the junior markets is, as you mentioned at the beginning, it's been a tough couple of years, and I share that sentiment. It has been. There's mornings where you wake up working in the juniors where you're like, what am I doing with my life? Why am I here?
Yeah.
And actually this morning I drove all the way to the other side of Toronto and met with a publicly traded company, and I was trying to explain to them how things work. And the truth is that if you're a retail investor and you're interested in investing in any of these junior stocks, these pre-revenue cash burning companies that offer a big opportunity, you have to look at them and realistically say, I've got a shot at a 5 or a 10x. If I
Yep.
don't, then what am I doing here?
Yep.
I'm not putting money in harm's way and taking this risk for an 8% annual return. And so I want to follow that up with, if I were an investor looking at Ridgeline, what's that catalyst that really unlocks that value? What is it that moves the needle and makes this stock one of those stocks that can rally the entire junior markets, and everyone can look at Ridgeline and say, look at what Chad did with Ridgeline. We can be that. What is it that's going to be that moment for you guys, Chad?
Well, we're going to see if how well this ages over the next 12 to 18 months, right? But I think that one of the main things, to a really great comparison you could make about Ridgeline, is think of like Kennerland pre-discovery at Frotet, right? They were about a 25 million market cap company, great deals, good technical team. But until they made that significant discovery at Frotet, there wasn't a lot of move in the market cap. Well, now they've hit over 100 million market cap recently this year, right? So that's a 5x, 10x from original investors on that stock. We're kind of in that early phase right now, right? We've structured great deals. We're starting to see those drill intercepts starting to come together, especially at our Swift project. But we haven't seen that re-rate yet and that market recognition, but I think we're very close. And so a few more good drill holes out of, for example, Swift with our partners at NGM, I think we could see that kind of trajectory where people start to go, okay, this is Nevada's next big gold discovery. It's fully funded by the partners already, and there's a carried interest. So that's the kind of thing that we're hoping is the major catalyst that kind of gets that excitement going on the stock. On top of that, we also have our Big Blue project, which is 100% owned. Copper porphyry play, past producing high grade mine of up to 6% was the average production grade in the early 1900s. No one's done any work there in 100 years. So we now are going to test beneath that existing mine for that porphyry source. If we're able to deliver anything that shows, okay, we're in Nevada, BLM ground, 100% owned with no royalties, and we just drilled a new copper discovery. I think, again, that's something that can be a major catalyst for us. So between our deal flow and our 100% exploration, I think in the next 12 months, we're hoping to deliver a material discovery to the market, and I hope that we'll see some appropriate response from shareholders in return.
All right, well, Chad, I really appreciate you hopping on here. I like to think of CEOs, they got to fit one or two rules. They've either got to have that technical background that makes me think that they know what they're doing, or they've got to have that unbelievable promotional ability that makes me go, they might not know what they're doing, but they're going to find a way to get money.
Going to go up either way.
Yeah,
Yeah.
and I'm getting that real custodian of capital sort of strong technical vibe from you, and I'm certainly going to be watching your story in the coming quarters to see what happens, and hopefully you'll come back on here after you guys are part of a major discovery, and
That's the
you'll
goal.
take the time to update our audience.
Yeah, no, that sounds great. I'd love it. Thanks for having me.
All right, everybody, thank you for watching. If you enjoyed this interview, please smash that like button, subscribe, and ring that notification bell. Guys, also let me know what you think in the comment section. Thanks, everyone.